Indian Meteorological Department is forecasting the weakest monsoon rainfall in over 2 decades at 92% of normal levels. This matters because the monsoon delivers nearly 70% of India's annual rainfall and is critical for agriculture, which supports millions of jobs. Weaker monsoon could mean lower crop output, higher food prices and even export restrictions on key commodities. Food makes up a large share of India's inflation basket, and higher prices could limit the central bank's ability to cut rates. Let's get more on this with Namrata Mittal, Chief Economist at SBI Mutual Fund. Namrata, welcome to the programme. Early monsoon signals are beginning to raise some caution. At this stage, how bad could this El Niño effect of hotter and drier weather be on India's crop production?
Hi, good morning. So just as you mentioned earlier, this is one of the weakest prediction that Indian Meteorological Department has given since 2000. So the first thing that you have to see is that how accurate has been their prediction. In last 8 to 10 years, they have improvised on their model and accuracy is fairly reasonable. And also, if you see in last 2.5 decades, when you've had 5 instances of El Nino, 4 of them have been coupled with below normal or deficiency in monsoon. So there's a high probability that this time around as well, India monsoon could be weak. Now the reservoir levels are considered to be above normal. However, the spatial distribution of rainfall as well as the reservoir availability would matter. So all in all, we do think that there's a high probability that agriculture output in the upcoming Kharif season could be weak. However, given the kind of stock that we have on multiple items, and as well as if you will see, government is taking a lot of effort to procure and stockpile multiple items spanning across vegetable pulses, and we do have an ample food grain stock. So availability might not be an issue. And that is why we don't think that there could be a steep jump in the food inflation. Of course, we are sitting with an unfavorable base. Last year was ultra low in terms of food inflation in India. We were in deflation for many months. So that does create a base by which there could be a natural step up in food inflation in India. However, we do think that despite the chances of deficiency in monsoon, it could be more of a creeping food inflation rather than a sudden abnormal rise. And that is why as of now, we do think that maybe next policy also RBI could pause. However, we have not seen in history, I mean, most of the time in history when Brent has sustained above $80 per barrel for 2 quarters or more, you have seen an accompanying rise in RBI rates.
I wanted to bring in that risk of oil prices remaining elevated, Namrata, because of the turmoil in the Middle East and under a scenario of the weakest monsoon rainfall in over 2 decades. If that does materialize, what then could be the upside risks to headline and core inflation for India under that 1-2 punch scenario?
Yes. So if you will look at producer price inflation, which in India's case is wholesale price inflation, that has already jumped significantly to slightly less than 4%. That is a double of the print that we saw in February. And even in WPI, if you would split the items between input components and the output components, the input components have seen a 9x jump in raw price pressure. So raw material costs have jumped 9x. However, what we notice is one of the very critical item, which is petrol and diesel, and hence the energy cost. Government has taken measures to reduce excise duty, and oil marketing companies are absorbing losses, because of which the retail prices of petrol and diesel has been flat for last 3 years. In fact, we do suspect that right now India is seeing 5 key states elections. So probably once the state election are over by the end of March or first week of May, there is a risk that there could be some rise in petrol and diesel prices. So that does make a case that ultimately the rise in raw material costs would also force businesses to take price hikes in the final good.
Yes.
And because, not so much because of weather, but because of an unfavorable base and this pressure on core items, we do think
Yes.
that India's inflation, which is currently around 3%, could rise to the headline inflation, retail inflation could rise to around 5% or more in a couple of months' time.
But that's still within the RBI's target range. I know it's fiendishly difficult to predict, and the weather is in the lap of the gods, but could inflation, do you foresee a situation, Namrata, where inflation breaks the RBI target range, or does it stay contained?
Yeah, so this will be highly contingent on how long does the supply challenges as well as energy price shock or maybe commodity shock persists. If it persists for yet another quarter, then we wouldn't rule out the possibility of inflation even crossing the target band. And that is when the risk of rate hikes also become meaningful in India.
Thank you for answering that question, Namrata. So under what scenario would the RBI raise rates or be forced into raising rates?
Yeah, so see, this time, one of the favorable situation vis-a-vis 2022 Russia-Ukraine war was that back then your retail inflation, even ahead of the war, was close to 6% and then it jumped to 7%. And policy rate was at 4%. We had the rate cuts during COVID and those rates were persisting. So your real rates were in negative. Right now, when your policy rate is 5.25% and your inflation is closer to 3.5%, then your real rate is in the positive. And given that this situation is different from Russia-Ukraine war, because we also have growth shock. There are multiple industries which are operating at a suboptimal capacity. So you would
Yes.
only know once your first April to June quarter growth is out. So there are simultaneous growth and inflation risk. So maybe 5 to 6% of inflation would still be tolerated by RBI. However, if you do see inflation rising beyond 6% and sustaining over there for, let's say, at least a quarter, that is when we do see the risk of rate hikes by RBI.
Namrata, where does this leave the rural economy? Indian farm incomes are already under pressure. We know that a bad harvest is going to make the suffering endured by Indian farmers only worse.
Yes. Luckily, or this time, the Rabi harvest, that's a winter crop, which is harvested during late March and early April, they have been good. In fact, they have been at record high. However, and that is also one of the reason why prices have been slow. Food inflation has been slow to catch up in India. In fact, government, while one would have expected that such problems or maybe a bad weather could have led to export restrictions, government has recently opened the export permit for wheat export. And in fact, India exports around 25 to 28% to Middle East, our food. So we are, because of the shipping challenges, there is a decline in agri exports, some of them being fruits and vegetables and even pulses. So that is again a headwind for rural income. So while the
Yes.
rural, this season has been good, the very fact that your many of these seeds or chemicals or pesticides or insecticides or multiple other fertilizer which are non-administered, their prices could rise and hence input cost
Yes.
inflation in rural economy could rise. That
Yes.
is a risk for rural demand going ahead. So we are in the camp that perhaps maybe in a quarter or two ahead, you will start to see a slowdown in rural demand.
And when does inflation and that slowdown in rural demand, Namrata, become a political problem? We all know that farmers are a very important vote bank. We saw that in the 2024 general election. Where does this issue of the minimum selling prices stand right now? And is it inevitable that farmers in this environment are going to demand higher MSPs?
So MSP is sort of de-linked with the other developments that are happening. So Kharif MSP would be announced by May end or early June. We do not see that a possibility of sharp jump in food inflation, because you have to remember that while there is a certain portion of the economy which is dependent on agri income, food inflation is a more of a concern from political angle, because there are more consumers of food than producers of food. But otherwise, we do see government rising up to a situation currently where they're not giving fiscal incentives to make up for the lost growth, but all the fiscal measures are right now aligned more towards absorbing the shock. So, for example, the excise duty cut in petrol and diesel by 10 rupee per litre. This is one of the sharpest cut in a go that we have seen.
Yes.
Now, the possibility of fertilizer subsidy hikes. So we do see a possibility that fertilizer subsidy could rise by good 800 billion to 1 trillion in this fiscal. And then offering insurance on the shipping and reducing import duty on multiple items. So government is taking, and also the procurement of multiple food items have been stepped up, barring wheat, all the pulses. And so government is taking measures so as to they can absorb the shock to the economy to an extent possible.
Namrata, there's another element here, and that is the way agriculture is such a contentious issue within the US-India BTA. I was talking about this earlier on the programme with an earlier guest. Is this ultimately a bad deal for Indian farmers, and are they ready for potentially cheaper US imports of farm products?
So when we look at the contours of India-US trade deal, as of now, with regards to agriculture and dairy sector, not a you don't see a significant compromise being made from India's front. Yes, there's an intent which has been cited to import more, but we don't think anything in the deal coming out forthright, which could be extremely bad for Indian farmers to start with.
Namrata, let's just round off the conversation and look at the worst case scenario. If the rains are not favourable, then has the centre done enough from a contingency planning point of view, whether it's ensuring reservoir levels are adequate enough or ensuring there's enough support in reserve for farmers?
So see, reservoir levels are something which is not in government's hand. You could build more dams, you could build infrastructure, you could build irrigation capacity. So irrigation, the percentage of agri land which are irrigated has increased by 10 percentage point over last decade. But those are more long-term measures. That is not something that you can do in a quarter or two's time. So if rainfall is deficient, I think there's something limited action that government can do to protect a fall in agri income. Yes, from the state side, India is a federal structure. From state government side, you are seeing multiple welfare measures being announced in terms of handing out more cash to farmers or women, or subsidizing electricity and other such benefits. So maybe if at all it becomes a very meaningful political situation, you could build in the possibility of some sort of a welfare program by to compensate for the loss in income. But that is not my base case as of now. And also, there are different predictions around, but El Nino is only expected to start from September onwards. So your actual sowing period, the key critical sowing period is June and July. You can expect, and there are now inventions which are leading to seed varieties which are more water resistant. So we have to really watch out. As and when these things develop, probably you will see more policy announcements, or one could expect changes in policy announcement then.
Namrata, we'll leave it there, Mum. Thank you very much indeed for joining me with your insights and analysis. Namrata Mittal there from SBI Mutual Fund. Now, the disruptions